Heads up, the IRS is warning taxpayers to expect some changes with tax returns this year. There are several reasons for this, including the adjustments that have been made to various credit and deduction allowances. These allowances were originally amended to help taxpayers financially during the pandemic. Number one, charitable donations. Last year, taxpayers were allowed a deduction of up to $300 or $600 for couples if donations were made. Now, typically, you can only deduct donations if you itemize your taxes. But for the 2021 tax year, all taxpayers could take advantage of this deduction no matter how you filed. If you took advantage of this deduction last year, it unfortunately isn't an option this year. Number two, the tax credit for childcare expenses has been reduced dramatically. For 2021, parents were allowed to deduct up to $8,000 of childcare expenses. This tax season, only $2,100 can be deducted. Number three, the child tax credit has also been reduced. This credit is for parents with qualifying children and helps to offset the cost of raising kids. There are several factors to determine who a qualifying child is, but one factor is age. In 2021, parents with children under 6 years old received a $3,600 credit, while parents with kids between the ages of 6 and 17 received $3,000. For the 2022 tax year, the credit has been reduced to its normal level of $2,000 for every dependent child under 16. Number four, the earned income tax credit has been reduced. This credit is for low-income earners, and the changes this year will mainly impact those without children. For 2021, single low-income taxpayers could get a credit of up to $1,500. For 2022, however, the max is $560. Now, for low-income earners with children, the situation is different. In fact, the credit has gone up. In 2021, low-income parents were eligible for the earned income tax credit of up to $6,728. And for the 2022 tax year, the credit has been raised to $6,928. Now, there were also talks about having to pay taxes on business income received through Venmo or Cash App. Hopefully, you've heard that this year the IRS will not be moving forward with this plan. I do believe this law is probably still coming, if not for next tax season, but sometime in the future. So plan and move accordingly. When you prepare your taxes this year, make sure to double and triple check the work, but also expect your numbers to look a little different. Due to these changes, your refund may be a little less, and if you typically owe, you may end up owing a little more.